Hi, everyone. Welcome back to the Engineering Real Estate Podcast. I'm your host, Samir. Today, I actually have a good friend of mine. His name is Siraj. So, Siraj, welcome to the show.
Thank you, Samir. Thanks for having me. I'm super excited to be here. I'm looking forward to a great conversation here.
Yeah, likewise. We've talked, we've chatted, and we got to know each other. So, do you want to tell the audience here who you are, where you come from, that sort of thing?
Yeah, absolutely. So guys, my name is Siraj. I am in Chicago, the great windy city, and an awesome place to be in the summertime. And we don't like to leave during summertime. One of the things that my family asked me is like, "Oh, let's go on vacation this summer." And I'm like, I feel like I'm already am being in Chicago. People come to Chicago for this summertime, and then I try to leave during winter times. I want to be away. Like one of my goals for this year is that I want to kind of be away from Chicago during the winter times and see if I can spend time in like Scottsdale. I like that area a lot. So something that I'm looking into there. So a little about me there. What else? I buy and invest in Illinois, specifically in the Chicago market, the Chicago suburbs, not the actual city of Chicago proper, but all suburbs that are outside it. But within that, we also have a specific parameter that we look for in all of our deals. So I've been in it, uh, let's see, for about 7 years now, in my entire career. And last 2 years have been full time. So that's been like the most challenging as well as the most rewarding. So I'm sure we're going to get into that a little bit more. So that's a little bit quick about me, at least on this end.
That's amazing. Yeah, it's a lot of people live in a certain area but may invest in a different area. But it's awesome to hear that you're doing in your backyard. Chicago is a wonderful place. I know that's thriving and growing. So that's awesome to hear that you are local and involved in your local backyard.
Yeah,
That's
and
huge.
one of the things you said was like it's growing. So there's as a city, as like overall, we don't have a huge influx like a lot of the southern belt, sun belt states, and a lot of southern states do, like your Texases and Floridas and Carolinas. They're getting a huge influx of population from your Californias and your New Yorks and stuff. So people are migrating there. We don't have that sort of a migration into Chicago area, but it's a very stable Midwest market. So, when we compare our rent growth and our rent prices as compared to the prices, I think that we have a very, very good market to invest in. But I can understand from a someone that's not local to Chicago, why someone that's like located, I don't know, California, or located in a different state, why they wouldn't want to invest in Chicago, because of the fact that we have these tenant friendly laws that are not as favorable to the landlords. So I can understand, but for me, I use that as an advantage to kind of hone down on my market and invest here, because there's not as many people coming in and driving up the prices even farther.
Yeah, 100%. And I think we've talked about this, right? Where it's you can make it work in any market, right? You can make it, it's just different strategies and different perspectives, but as long as you are the expert in your market, you can kind of do and succeed wherever, right? That's
Yeah,
the key. And knowing your market and how to kind of maneuver around it, which areas to invest in, which not, et cetera, right? Like that becomes way more important, I think, whether you're investing in your backyard or not, right? That's number one thing, is know where you want to invest and that market specifically. That's
yeah,
huge.
absolutely. No, because even within the suburb, like we have a lot of suburbs. We have very good suburbs. We also have some decent suburbs. We also have suburbs that you might not want to be investing in if that's your investing strategy. There's a lot of ways and a lot of types of markets that are in Chicago. You could be in the city of Chicago proper, and you could be like our neighborhoods in the city of Chicago are like, I don't think that we have other states like this. You could be in one block, and that's like a phenomenal neighborhood, and price per unit could be like 300,000 a unit, and then you could like go over literally 2 blocks, 3 blocks over, and all of a sudden you could drop down from 300,000 to like 100,000 a unit. It's like those. So you really, really, really got to know your market, especially in the city of Chicago. And that's one of the reasons why I don't play in the city of Chicago, because I didn't want to be like block type of centric investor. So I'm investing in the suburbs.
Yeah, no, that's amazing, and I think it sounds like you're doing really well there, and it's you have something that's working for you, right? So, all I want to touch on basically is something that you mentioned there, where you've been investing for 7 years, and then you transitioned full time, right? Which is, I think, a goal for many is to eventually get to that point where they feel comfortable enough, whether it's cash flow or whatever, that they can transition over to real estate full time. So, talk to us about that. Like, what was that journey like? What did you do before real estate, right? Was it real estate related? And then what did it feel like leaving?
Yeah, no, it was not real estate related. However, I will say that I come from a financial background. I used to be I'm a CPA, as well as I used to work at Deloitte and Touche in the consulting side. So I was on the financial consulting side. So I used to see numbers all day. So you do need that obviously on the underwriting skill side. You do need those numbers like very, very good. You need to be very good at that. So after college, graduated in 2011. So about 10 years ago, oh my God, 11 years ago. And so after that, I pursued my CPA and started working at Deloitte and Touche. I was in the consulting side for, about 6, 7 years. And while I was there, I was part-time starting to invest. I, bought my first property, then, started just, I noticed that it was successful. Then I just kept buying more and more over time. And even along the way, while I was there, consulting is very, very rigorous. Like it's time consuming. It's, you really got to be very time efficient when you're at Deloitte, and especially if you're having this side gig or side hustle going. So you could imagine, like, I'm traveling during the week. I come back to the hotel and then I'm looking at deals, and on Zillow, a tab is open while you're in the office. You got one tab open that's on Zillow or Redfin or something, and you're trying to do kind of multitasking and stuff. So there came a point where it was during COVID. It came a point where it was like making a decision, which way I'm headed now. And I really thought that, for the last few years, the investments that I had made had done very decent in terms of cash flow and in terms of equity growth. So I thought, I might as well try now, because there's never going to be a better time to do it. So just went all in, and in 2020 or September-ish of 2020, and ever since then it's been great. For the last 2 years, I've not looked back yet, and the plan is to just grow this portfolio and make this something into something very, very big.
Definitely. Yeah, no, it's one of those things that it's such a big move, but it sounds like, when you're set up correctly and you have the right mindset for it, it can really do wonders, right? And when you go full time, I want to ask, like, some of the things that you were doing before, right? Where you're time blocking, or, you're setting aside time to look at deals even while working. How has that changed? Once you go full time, has it just now you have a lot more time to do for real estate, or is it still you have to be disciplined?
Oh man, I'm laughing because I feel at times I'm wondering how I was working at Deloitte while I was trying to invest in real estate. I am surprised, and like, 'cause days just fly by, and I feel like I didn't get anything done. Like, what now that I'm full time into it, I feel like days will fly by, and I'm like, man, like, I don't know how I was doing it before, doing both at the same time. So time is just never enough. But it's just that, my time now is being spent different ways right now. While I was there at Deloitte, kind of was doing something, doing it, call it like half-assed. You're just getting by type of thing. You're not setting up the proper structures in place, proper teams in place, proper, softwares, all that kind of stuff. And so one of the things that, I decided when I was going to go full time is that I need to have a proper property management system, a proper intake system from tenants, a proper, accounting software, leasing management, watching the revenues, those types of things. So once I went full time, like, we added those softwares on, hired on the right teams, and that team is still growing, and it's going to continue to grow, because every few months there's a new need within the team for a different type of a skill set. So that's something that I'm kind of always assessing and always kind of changing up the business plan. Today it could be someone that I need as just an admin, and tomorrow it could be someone that I need from as a project manager, or and those are all the things that I'm kind of always thinking in my head. Like, every time I do a task, it's like, okay, is this task outsourceable to someone else? And there's a lot of tasks that could be, and then there's, you know, a couple of tasks that I don't think I would ever hire out for. That's something that I would do. Like one of the main ones is acquisitions. Acquisition is something that I myself want to do, and that's because of my business model and kind of how I run my business. I want to keep that in house, because the acquisition side is, I think, where the money is made, and that's where the equity is made, and your contact with the seller is you talking and you speaking your language to them and your style, which can dictate, you know, do you get along with the seller, do you not get along with the seller, do you get the deal, do you not get the deal? So yeah, so in short, I think you're asking, like, I felt myself kind of diverting from the question, but I think you're asking, like, time wise. Yeah, no, time wise, you just got to be super efficient. You really got to plan out your day. Like, you know, my calendar, if you look at it, like, my calendar is, like, you know, constantly, like, you know, busy. So, like, I book out my calendars in advance of whether it's tasks I got to do, calls I got to do. I'll plan them out. And then I also have, while I have that, I also have my notepad kind of sitting right next to me with all the tasks that I have to do that day. And then, you know, cross them off. But today I'm looking at it, only, you know, 2 out of the 10 things have been crossed out. So there's a lot more to do, you know?
100%. There's always, right. And, but, you know, I just want to touch on a few things there. You said, sounds like, you know, what really changed is you started treating it more like a business, right? And instead of it being a side hustle or hobby that, you know, you just kind of do alongside your main thing is you really start thinking about it, systematizing, getting people in place, you know, processes in place to kind of outsource, right? To start thinking about your $1,000 or $1 million an hour tasks, right? Like the things that you can go and influence and really change things, right? So that's huge. And I love what you said about time blocking it and making sure you still, you know, even though you have more time, you don't treat it that way, right? You have to be disciplined. And I had a mentor actually once tell me that he's like, show me your calendar and I'll tell you if you're serious about this business. Right. And I was like, at the time there was nothing on my calendar. It was just, you know, like it was huge blocks. I was
Go
like,
to
man,
the gym.
yeah, it was like literally just giant blocks in the middle of the day. And I was like, what am I doing? You know, like he's right. If you don't have things that are set and you're not really focused on doing them, are you really doing anything? Right. And so that's huge. So I live and die with my calendar as well. Seeing yours, I was like, I can relate. So, but you know, one thing you said earlier is that, you know, you started feeling success earlier, like right in your deals and stuff like that. And I want to ask you, what did success look like for you in those beginning deals, right? And success is different for everybody, right? So, what did it look like for you in your first deal? Was that a success, right? And if so, why or why not?
Yeah, and you know, Samir, I think what would also help is, like, not before the first deal. I think what would also help give context to my journey is what happened before that. So I'm going to add that in. Okay. Sorry to divert your topic, but I'm just going to do that anyway. So, and the reason I'm doing that is because, like, depending on the people who are listening, you know, people are always like, well, you know, did you just buy the deal, or was it, like, you know, some sort of like a step that got you there? So what had happened was in 2013, end of 2013. Yeah. We used to live in a townhouse, and my parents, we had bought a bigger house with the family. And so, you know, when I was moving there, this is when I was single, when I was moving there, we had this townhouse that needed to now get rented out. And me being the oldest one in the family, I just got tasked with that, you know, responsibility, like, hey, you know, go try to rent this thing out. And I think my parents at that time would not have been able to get the quality tenant and the right tenant in there. So I'm glad they gave that task over to me. And not that I didn't even know anything about real estate at that point anyway, but it was just that, you know, I'd been kind of in the professional career, so kind of knew, you know, how to talk and that kind of stuff. And so my very first task was getting this townhouse rented out. And I got that thing rented out at, I thought, was a very good rate at that point in time. 2013, not the best of the markets, right? Of course. So at that point, I got it rented out within 2 weeks, and, you know, I had to sift through, I don't know, I feel like I fielded probably like 100 calls, and, you know, of them, like, I had like 20 tours or something like that, and from them you had to pick one tenant. And so I did, and that went successful. And, you know, at that time, like, you know, like a light bulb kind of went off. It's like, wait, I got something rented out in 2 weeks, got a good tenant who's looks like it's going to be paying on time, and we're going to be making, you know, at that time, I think rent in that place was like $1,300. So we're going to be getting $1,300 on this thing, and our mortgage is only this much. This seems like just like phenomenal. Like, what is going on here? You know, so it was like a light bulb that went off. And at that point, it was not like a fully illuminated light bulb. It was like, you know, like a half lit. So you're like, okay, cool, there's something here. And so, you know, I kind of I have a good group of friends around me, and like, you know, one of my friends, if he listens to it, he'll laugh too about it. But like, you know, we were just kind of sitting down, and one of my friends has this, we like to hang out there. It's a warehouse. It's a car warehouse. And, you know, we just like to hang out there. It's like a chill spot. So we were there, and I was talking to this friend about it. Like, oh, I got this place rented out for this, this, and this. And then he's like, oh, you know, I have this family member that lives in this building in a different area. And, you know, he just rented out his place for I forgot what the rent was, but you had to rent it out for this much, and he bought it for this much. I'm like, whoa, what the heck? That's crazy prices. And I'm like, hey, listen, you know what? Can we talk with that? Can we talk with your uncle there? And so we did. And you know, in that same building, there was a condo building, and that's when my journey kind of started, in talking to this friend. And there was a condo in that building. There was a bunch of condos, like probably 180 unit building. And so he had rented that one out. It's a very nice building, nice amenities, all that kind of stuff. So my first condo purchase was in that building. And, you know, I knew I wanted to look in there because it had nice amenities. Like, it was like, you know, the uncle was like, hey, this thing rents out like fast. So I'm like, that is what I want. And it was a good area, two big major intersections, all shopping around, all this kind of stuff, all the things that you hear like all syndicators talking about, right? Like, oh, great location, you know, shopping nearby, schools nearby, highways nearby, all that kind of stuff. So that's kind of what we did. And so we got my first condo purchase. And so you asked what success looked like. For me, success was, of course, like, you know, there was a numbers aspect to it as well. Being in a financial background, the success was that, okay, I got to rent it out for this price and I'm making this cash flow a month. But I think success more was for me in like this confidence that I got that, you know what, I did something and it worked, and that means I can do more of it. And I think that's what separates the whether or not you're going to do a deal or not, is the execution part of it, and a successful execution at that. And so I think that's one of the main lessons that I got from it, or the main successes that I got from it, was the execution and the confidence that, you know what, I need to do more of this to build something and get this engine going. And so, did you want me to talk about this deal that I bought? Kind of
That's
just high
amazing.
level.
Yeah. Yeah. 100%. I mean, I just want to add there, right? Like, that is huge. Confidence and credibility, and just getting that first one under your belt, second one under your belt, and the confidence builds, right? Like, it's crazy how it's exponential, and that, it doesn't feel like it's impossible anymore, right? It's like, wow,
No,
this
no,
thing really works. And it's like, it's not too good to be true. It's, you know, it's not just, you know, people talking about real estate all the time, but it's
right?
really something that's makes sense and it works, right? So
Yeah.
yeah, I'd love for you to, you know, go into the like nitty gritty, you know, the details, if you don't mind.
Yeah, absolutely. So the first deal was again a condo, and at that point, like, I didn't have like a strategy in place, and that's one of the other things that, you know, when you hear some of the times, like, you know, of course, being on social media and like TikTok and all these things, you hear like experts and gurus talking about like, know your market, know your strategies, know, you know, this before getting in. And I don't think that I followed that. I just kind of just wanted to execute with like whatever capital I had available. I just wanted to deploy it and just get it to use and see if it works. That was my goal. And of course, in doing that, I wanted to make a sound decision, considering that I have a financial background and making sure underwriting is good. You know, so my advice is not just a very, you know, like, just go out and buy it. It's you know, you got to make a sound financial decision. And so this condo, so I bought it for, at that time, just remember that this is a 2014 market. So the market's not as strong yet. So, you know, so when I throw out these numbers, people are like, whoa, no, you're lying. So this is in a Chicago market, very, very stable suburb, easily rentable. You know, average household income in that area probably, I think now is probably like a 60,000. So, you know, decent market. And it's in a stable suburb too. So I bought it for, it was a condo for 39,000 is what I bought it for. Okay. So we bought it for 39,000, and it was an older lady selling it that was just, I think, I don't know where she was going, but she was like an older lady, single, selling it, and it was a studio unit. So bought it for 39,000, and literally it was turnkey. Bought it, did not do a single thing to it. The day I closed, or maybe even like a few days before, I might have just listed it on Craigslist. That time Craigslist was big, right? I don't think anyone uses it anymore for rentals, but, you know, at that time Craigslist was big. And at Craigslist, you know, you got to be very, very skeptical, because you get some shady people.
Some scammers.
Yeah, definitely. So, we, again, kind of the similar thing as I did with my parents' townhouse, fielded a bunch of calls, and, right at that time, or maybe like around it before that, there was also some, building blocks, like Bigger Pockets was one of my building blocks. Bigger Pockets is very, very good for anyone that's starting out, right? A lot of information, a lot of newcomers, as well as some experts that are throwing out free advice all the time. So it's like being in a free mastermind, or like a free mastermind that has a ton of value. So at that time, like, I was kind of going through Bigger Pockets on figuring out, how do I get rented out? How do I screen? How do I, do this and that? And so I had no systems in place. So, I just go on, like, once I had like a good tenant in place that I thought was a good tenant, they showed me their pay stubs. And at that time, like, I was doing everything, fielding all the calls, going to the property to show, locking the doors, show them, like, here, being a leasing agent, being a, property manager, showing them all the amenities, doing everything, screening. So, we screened it, got someone, and we got this thing rented out. At that time, rent was like in this place 700, maybe 700, 725. So you got paid 725, and HOA in there was like $150 at that point, and taxes were $100 a month. So I was like, whoa, no way, I'm keeping like almost $500 a month here in cash flow. This is phenomenal. So, I can pay off this investment. And at that time, I bought these properties in cash. So, I was like, well, man, I could, it's $6,000 a year, and like I could pay this property off in like, 8 years. And this is great, and that's what the kind of the snowball effect was. And then kind of seeing the power of real estate, and while building up appreciation. And so, like, that condo today is about $80,000. So, we've kind of doubled it in that, time of ownership that I've been. And oddly enough, I still own that property because it was my first one. And in that building, we have a bunch more because those cash flow well and all that kind of stuff. So we've still hung on to those, and we don't buy any more condos now, but, we're still hanging on because those cash flow very well.
Yeah, 100%, right? Like, why let go of a great asset? So
Yeah,
that's one of my things too, is like, why sell unless you have a better opportunity, right?
That's what it is. Yeah, we're waiting for the right opportunity to arise, and then these will probably be deployed to bigger assets.
Nice. I love that. So that's going to help you scale up, right? And this is kind of one of those things. Are you planning on doing a 1031? Is that the route you're going to?
That's one of the goals. Yes, one of the goals for sure. Every single time I'm trying to, I generally don't sell anything because I don't need to right now sell anything. This is more, I'm in the acquisition mode. So if I need to sell, I will try to definitely time it so that there's some sort of a 1031 involved. Definitely, or like a reverse 1031 if needed.
Yeah, 100%. And for anyone listening who that just went over their head, they're like, what the heck is happening? What are these? There are these numbers and everything. A 1031 is a great thing in the tax code for real estate investors. A reverse 1031 is for where you can actually buy an asset before you sell. So it's kind of a nice way to get out of that timeline issue that mostly happens for 1031 exchangers. So I'm not, neither of us are CPAs or licensed attorneys anymore. You used to be a CPA, but talk to your tax professionals. Yeah. Sorry, were you saying something?
No, I was just saying that there is a timing aspect to it. Of course, you got to buy something within like a 6-month period. So there is like a bit of a timing. Sometimes like, you end up buying a bad deal just because you have that time crunch. So I definitely don't want to be in that sort of mode.
100%. Yeah, we see a lot of that happening. So, those are going to allow you to level up, right? And do you know what right now you're thinking is like, are you looking into going into maybe like, multifamily with that? Or are you going to scale up to, maybe buy the entire condo plex itself, or what are you thinking?
Oddly enough, there's that building. There are some HOA issues, and I actually we've considered buying that entire building, but it's a ginormous purchase. I just kind of ran some back of the napkin type of numbers, and it's like a $35 million asset because there's like about 180 units in there, so it's quite big. But we have brought in someone to kind of look at it, but so that's kind of in the works. But the goal is to be buying larger multifamily assets. We buy stuff that's as small as 8 units all the way up to 40. So the goal would be to sell off a few condos if it's a large enough purchase. Sell off a few condos and raise more capital on top with it. and then, just sell it off and 1031 or something like that. So just depends on the opportunities that come, and at that point, my liquidity available and my investor capital available.
Sure. Yeah, no, that totally makes sense, right? And it's the opportunity that arises. So, I mean, speaking of like right now, I think you're saying that you might have an opportunity currently, right, that you're working on. You want to tell us a little bit about that?
Yeah, absolutely, absolutely. So we have a few opportunities that we're working on. We have a 14 unit that we are acquiring out in a very, very stable suburb. I really like that market. Very high household, average household income. It's close to the train station over there. It is near a park, near shopping. So it checks all those boxes that you're like, great. And get this, this has we're under contract on it now, so kind of could talk more about it, but it's the debt that's on there is a Freddie Mac debt that we have locked for 3.35%. The interest rate is 3.35%, and we're locked in for another 8 more years on it. So
wow.
Yeah. So there's not a single bank out there or a single entity that can give you that type of a loan anymore in the current market. The lowest rate that I've probably seen is 5%. If you're buying around $1 million or so. So this deal is gonna be phenomenal just because of the debt standpoint. We're gonna look to hold this building for the next 5 to 8 years and just keep that debt constant, and just basically keep increasing the rent every single year by a very small minimal amount too. We're going to keep increasing the rent and thus increasing the building value of the property, and then look to exit by either refinancing it, or we might sell it. I'm not sure just yet.
Gotcha. Yeah, no, that sounds amazing, man. I'm excited for that. For anyone that wants to reach out to you, I'll put your contact info in like the notes, and then they can reach out. But that sounds really interesting. When you first started, right? Like, did you think, buying from a condo all the way now, looking at this 14 unit or up to like 40 unit, right? Like, did you think that you'd be able to ever buy something like this?
No, no, at that point, no way. The condos, I honestly, I've changed my business strategies so many times, just because, there was a point where I was buying condos. There's a point that I was buying townhouses. There was a point that I was buying apartment buildings. Then there was a point that I was flipping apartment building, flipping single family homes. So it was just a constant strategy change. But now we know, where we excel is apartment buildings, and that's where we're headed.
I love that, and you got to figure it out, right? You got to try different things, and seeing, maybe you flip a house, maybe you don't like flipping at all, right? And really it's just figuring out what you like and sticking with it, right? So that's amazing you guys found that. And so for somebody who's just starting out, like that's a little, might feel like something called shiny object syndrome, right? Or it's like, today you want to do this, tomorrow you want to do that, next day you want to do this, right? It's important to kind of find that thing though, even though shiny object syndrome is real and you might get distracted. It's really important to kind of dabble and figure that out, for at least your own sake.
Absolutely.
Yeah, 100%. So, what's like, knowing what you know now, right? Like, if you had to go back and start over, would you do something different?
Lots of things. One of my biggest regrets when I kind of look back at my career was, I had this mindset of, I need to, like, if my underwriting said I need to buy something at, I don't know, let's make $100,000, and the seller was at 110, and you countered at 102, and the seller says 104. I'd be like, no, my underwriting says 102, and I'm not buying it, And when I look back at it, it was like that building or that apartment has now almost doubled. So that $2,000 even like worth even considering. So at that time, like the brain was short-sighted, and you kind of didn't know the opportunity, and you didn't know where the market was headed. Of course, the market the last couple of years has been very, very forgiving for anyone. But at the same time, so that's one of my biggest regrets, is that. And then my second regret was that I wish that I had talked to more people kind of about what I was doing and listened to the advice too. And I think that I would have been able to excel way faster. And even now, I don't think that I'm at my optimal level of where my portfolio needs to be and where I need to be. So, I'm now, I've joined some masterminds, part of some larger groups that help, and we kind of discuss We discuss, high level business strategies, things, like what's the, things such as like, where's your portfolio at? What are you looking to do goals wise? Let me help you get there. And just kind of interchanging advice on what's working for them, what's worked for them team wise, financing wise, those sorts of things, because those are the things that are kind of accelerate your career and accelerate kind of where you're headed in the future.
Yeah, 100%. I love that. And just to kind of add on a little bit to that is, what you said is important is listen to the advice, right? Like take it in and really, I think the next step is apply that, right? Is like, I remember going back and just reading a whole bunch and listening to a ton of podcasts and, also absorbing all this knowledge in the beginning, but not really applying any of it, right? And just it's somewhere in the back of my brain, all those things. But it's like, if you're not applying these things to your daily routines, actions, it's like, none of it really matters, right? So it's like, take that little bit of knowledge, apply it, and then don't do anything else until you apply that knowledge, right? Because it's so easy to keep absorbing more and more and more rather than
and never execute. Yeah,
exactly, right. So the point of all this education and things is to really go and apply, right? So that's something I want to just stress, because I've been down that road too, and I think a lot of other folks have as well. Yeah. Well, I mean, Siraj has been amazing. Thank you for coming on here. It's really a wealth of knowledge that you've shared. And so, for anyone that wants to connect with you, I know you got a busy schedule, but I know you make networking a priority. So where can people reach out to you? What's the best place?
Yeah, definitely. So I am starting to kind of be more social. It's one of my goals for this year is to be a little bit more, not just growing the business, but also kind of growing the presence of myself and the company and just me, and see if I can, and along the way, help as many people as I can. And within my community, I always, or at least my network of friends and stuff, like, I always try to help. Like, we have on Monday nights, I play basketball. And at that group, is a group that's been around, that's generally been the same people for the last few years. So I try to help the guys over there. They'll always ask questions like, hey, what should I do in this case, in real estate related and that kind of stuff. So I try to help that way. But now it's also like, the next level of community, like helping those guys as well. So so anytime someone wants to reach out, I'm definitely looking to have a conversation, always trying to see if I can help in some small fashion. So connecting with me, probably best through my Facebook or Instagram. Not as active on LinkedIn yet, which I do need to get to. So, if reach out to me on Facebook, Siraj Ahmed, or on Instagram at Siraj88, and, just reach out to me, let me know what you want to talk about and stuff. And I'll send you my calendar link, and you can set up a time for me to have a chat.
Love that. Yeah, I'll include both of those and tag you. So real quick question before we drop, who's your favorite basketball player?
All time, Michael Jordan.
Chicago, of course.
Of course, that's got to be. But man, Kobe Bryant is up there, just of his work ethic. I think that was. I mean, of course, he's a phenomenal basketball player, skill wise. But I think what I probably, just because he was Michael Jordan was kind of retired by the time I started watching basketball, so he's just more of someone that I kind of watch DVDs of, and he's being in Chicago, everyone talked about Michael Jordan, so that's how I kind of got a good love for it. But Kobe Bryant, I actually watched him play and kind of listened to the stuff that's on YouTube about him and his work ethic. And I think that work ethic is probably what I admire the most about him, and try to kind of absorb that. I know it sounds kind of cliche, what is basketball player, but his work ethic, it could be applied everywhere, not just real estate and not just basketball. It could be applied anywhere, any career you're in, even within your own family and that kind of stuff. So I think for those two reasons, these guys are my basketball favorite players.
I love that. Awesome, man. I can totally relate to that, watching Kobe grow while growing up, and he's my favorite player too. So
awesome.
yeah, dude. Well, anyway, thank you again, man, for coming on. It's been an absolute pleasure. For anyone that wants to reach out, Siraj is amazing and just always happy to connect. So reach out to him, and I'm sure he'll help you guys out. Thanks,
awesome.
everyone.